Hi everyone, it's me Dalia, and today I wanted to talk to you. I'll give you a market update, and as well as giving you a market update, I wanted to talk about interest rates and how to shop for interest rates. Now, more than ever, we're all very sensitive to mortgage rates, and people don't really know all that goes into the mortgage rates and how you can actually shop for them. All right, so I will give you an overview of that. All right, so first, let me discuss what are the current housing trends. So a lot of people, some people think that home prices are dropping, and they have been discussing that. And we are in the same place last year as we were this year. Last year is looking a lot like this year. So people were holding out, watching for prices to go down, but still prices have sustained, and almost in the entire US, prices are either 2 or 3% up from last year. And a lot of headlines are saying that home prices are crashing here in Southern California for the majority. Prices are not going down, and they're sustaining. There might be some areas that seasonally have adjusted, but at least most places are showing a 3% increase over last year. So, what is contributing to the prices being sustained is the mortgage rates went down last year in the spring, this year in the spring, sorry. And price right now, interest rates are holding. There's a Federal Reserve meeting that's supposed to happen that started today and it's going to end tomorrow. I see some realtors right now saying that they've already announced that there's going to be 4 to 6 interest rate cuts. I haven't found that directly from any source. If you have, send me the article. But the Powell is supposed to speak tomorrow and say what is going to be. Everyone wants to know if the rates are going to continue to go um, up, or if they're going to hold, or if they will go down. So we're all waiting for that conversation tomorrow. A lot of people, investors, a lot of different sectors are all waiting for this conversation to see what's going to happen next year. If interest rates do go down, it's going to be a madhouse. There are so many home buyers that are really waiting and waiting and waiting this out. A lot of people are sitting on those mortgages, and they're hoping that either prices fall or rates fall. So we'll see. If the rates do go down, I know that prices are going to go up in Southern California. We're going to see like lines out the door, just like we did last spring. The rates were down in the sixes, and it was just like lines for every home in LA. Every house was getting about 20 to 30 offers, 10 offers when it got a little bit, when it started in like January. And by the spring, it was about 30 to 20 offers on each house. So it really just depends on what happens with the the interest rates are determining how the real estate market goes. The economic data shows that inflation is cooling, but because inflation has been going on for so long and it's so high, that's what has the Powell committee, the Fed, not wanting to raise lower the rates too quick, and we just go back into more inflation. So that's something that everyone's speculating as to what's going to happen tomorrow, right? So we're impacted by that because everyone that has a good mortgage that refied during COVID is sitting on their mortgage. So they don't want to go anywhere. And you guys know that builders aren't really building. So that's really causing affordability to go down. And that's really what's has really cut down the sales volume. The amount of homes that are being sold has really gone down um, overall this year. Okay, so it looks a lot like we did last year this time. Okay, and we're all waiting or holding our breath for that meeting tomorrow that will say what more of the outlook will be next year. Okay, so let's say you do want to buy a house and you're like, I'd rather just buy a house now, live in it for 3 to 4 years, and suck it up, have a payment, and then refinance eventually, maybe 2 or 3 years later. Okay, so how would you shop for interest rate? Well, the first thing I'm going to ask you to do is check your credit score before you start shopping for a home mortgage. Number two, look at your income tax. If you're a W-2 earner, it's a lot easier to shop. I know for myself, I'm self-employed, and my taxes are a lot different than for a W-2 person. And that really affects the loan too. So the type of loan you get and the type of income you have. So that's going to be the first thing you're going to ask for yourself is what kind of interest rate, what kind of credit score do I have? What kind of income do I make? How much down payment do you have? Because that's going to determine what kind of loan you can get. I've mentioned to you that there's a lot of down payment assistance programs. Usually those do cost a little bit more money because they're going to give you money, but then the rate goes up. It's a higher risk for the lender. If you have a higher down payment, your rate might go down. If you're self-employed and you're not using a loan that it matches your income tax, directly match how your income looks, that's a different cost to the loan. So there's like bank statement programs, like for example for me, where I look at all the income I make. I've used that when I purchased one home. So it just looks at all the income that I made, because when I first started as a realtor, I was not making the money that I am now. So if you look at 2 years taxes, maybe my first year it was not good, but my second year is a lot better. So I had to use a thing called a bank statement program where they look at all my income from my checks, from my commission checks, that will determine how much I qualify for. So those are all different factors that will determine your interest rate. So once you've gathered all your documentation, you figure out your financial situation, your down payment, your credit score, you figure out kind of what kind of loan you want to get. You want to start looking then for the rate. There's 3 different ways I would go about this. I would suggest that you get pre-approved with at least 2, preferably 3 banks, and you're going to start looking with one that's a direct lender, a broker, and the third one could be either like one that's 2 brokers, for example, but different companies, or 2 direct lenders. So there's different things that I'm going to break down here. So what's a mortgage broker? A mortgage broker can go and talk to about 200 or 100 different lenders on your behalf, and they'll look at your file and be able to shop for you. But there will be higher costs on because they are providing you a service. So you have to look at that. A direct lender could be someone like, for example, like Bay Equity. They're like or East West Bank, a bank that just will lend, that gives you the loan, and they originate and they do all of the financing. So they're not going to present your information to several different other banks. It's just one bank that your loan goes there. So sometimes when people have been denied, it's because they only look at a specific way of financing and you don't fit into their box. And that's the reason you were denied to buy a home. So if you look at a mortgage broker, they might have more creative ways, or different banks, and can look at several different banks to help you qualify. They might also have a lot of different down payment assistance programs that they work with. So you want to go and look at those 2 places to get pre-approved. You want to ask questions, and you want to compare the pricing between the mortgage brokers and the direct lenders. And if some people think credit unions are great, when I tried to buy my first home, the credit union did not help me out. They all required 20%, which is something I did not have. So see what your credit union can offer. Then you want to understand the points. So the points are, so let's say you ask a lender, oh, what's your interest rate? One person could tell you 7%, another person could say 6.1. But you have to also have to ask, what are the discount points you're charging me? Because they could charge you money for that rate they're giving you. So it's not just like one answer. They have to say what's the rate and what's the points. Then you want to look at the annual percentage rate, which gives you more of the view of the actual loan. It gives you view of all the interest fees that come associated with that. And, um, you know, if you get a 15-year mortgage over a 30-year mortgage, of course, the 30-year mortgage is going to cost more. But in California, most people cannot afford a 15-year mortgage. And once you do get this comparison, just know that your rate is not locked in until you found the dream and the home, or your home that you want to purchase, and you actually lock in the rate. So that's another thing to consider. Once you figure out the pricing, you can see who in general what's going to work for you. Also look at how they answer your questions. Are they available on the weekends? Who's going to service you better, because this is a long-term commitment. It's a 30-year mortgage for most of us, and the availability and the service that you get from each broker, from each loan officer, is different. I'm so sorry, guys. This is live, so you got a live view of me sneezing, and that's my puppy Stella. Say hi, Stella. So yeah, so those are all different things to consider. All right, guys. So I've talked a lot. If any of you have questions, this was a longer live. If you have questions about shopping for a loan, or different loan banks, direct lenders, brokers that could be recommended to you, whether you're self-employed or W-2, or if you want to get qualified based on your assets, just income that you have in the bank or other things, just let me know and we'll find you a way to get your home. All right. Thank you so much, and I hope you have a great day. Take care.